Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar, a second indecisive pattern, this time an indecisive doji cross on Friday based on the June 2018 high at 118.51, with the June 2025 high nearby at 118.29. Below this we have a fairly clear zone down to the green short medium moving average, currently at 117.55. We're further down the October 21 high at 116.92 and the mauve medium moving average currently at 116.85. Overhead, the next resistance is the bright pink neckline extension to the April to May 2020 reverse head and shoulder pattern, currently at 120.05. Overall, the market remains within the mid 2025 based bright red shallow bull channel, which is currently 116.04 to 120.82, which is the main showrunner for this market. So far today, nothing much, a little lower than when we closed on Friday night. Cable, aka sterling against the US dollar. A bullish engulfing pattern on Friday after the previous session's indecisive doji cross. We finished edging just up and over, but not too far over, congestion from the February 22 high at 136.43. Notably, we are still over, if only by a little, the broken, very shallow dark blue bear channel, dating between early July to early August last year through to late January this year. And that's currently 129.85 to 136.12. Staying above this dark blue bear channel will now be the single bullish imperative of this market if it is to retain its bullish nature. Now, so far today, nothing much. We're still flirting with the February 2022 high. US dollar against the Japanese yen. An indecisive doji cross, almost a gravestone doji on Friday after the previous session's fourth bearish black crow. That altogether summed up a weekly key reversal down last week. Prices pressed down once more for a third straight session onto the 38.2% Fibonacci line of the July 23 to July 24 move at 152.52. Further down we have the interesting combination of the October 22 high at 151.94 and a November 23 high at 151.92. Now this halted the decline in late January and should not be overlooked. Further down is the bright red lower bull channel line, currently at 151.16, my apologies, of the previously breached bright red April to November 2025 bull channel, which is 151.16 to 158.04. Now I've also drawn a very, very acute late January to mid-February bearish Andrews pitchfork. Not highlighted yet, but I've drawn it there, and would consider the upper time, currently at 154.42, in any conversation for the top side, though I admit I may finesse this into a shallower bearish shift pitchfork if pressed, especially on any move towards the mauve medium moving average overhead, which is currently at 154.80. Now so far today, well, a move higher from the 38.2% Fibonacci line at 152.52, but for the most part has been only as far as the 61.8% Fibonacci line of the 2024 move at 153.40, but we're just pushing up over that at the moment. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top on Friday, but one that could also be seen as a bullish harami. This after the previous session's bearish opening black Maribozo and sixth bearish black crow. We are now down, sixth bearish black crow, yeah. We're now back down within the originally and previously broken December 2025 to date bear channel. And in some ways, we really never left it when we broke higher in late January. Now the base of the action was, for a second session, the May 23 low at 689.53. And I get the distinct impression prices are being forced down onto this support. Whether it will hold, we'll see. Meanwhile, further overhead is the interesting bright red extension to the upper trend line, currently at 693.24 of the May to August 2022 ascending triangle pattern. Now, so far today, well, a higher opening, but then a strong move lower, below the May 23 low, and towards the 50% Fibonacci line of the February 22 to April 25 move, which we've reached at 686.60, but then bounced upwards. Now, this is the lowest low right now since April 2023. US dollar against the Brazilian real. A higher, but still indecisive spinning top on Friday, after the previous session's key reversal up and bullish engulfing pattern, which was only just on that one. It was a continuation in many ways from the reactionary jump up seen in the previous session from the 50% Fibonacci line of the October 19 to December 24 move of 513.82, but the rise was capped by the combination of the 61.8% Fibonacci line of the April 22 to December 24 move of 524.07, and perhaps more importantly by the declining dark blue middle time, which is currently at 523.02, of the important mid-December 2024 to mid-April 25 bearish shift pitch walk. This bearish shift pitch walk is still the showrunner here for this market. US dollar against the Mexican peso. An immediate countering bearish engulfing pattern on Friday after the previous session's bullish engulfing pattern. The market was once again pushed down below the breached November 2025 to date based bear channel, currently at 1718.73 to 1763.80. It is not too well defined a bear channel, but it is still there and has been the showrunner here since late last year. However, in the attempts lower in January and February, prices are finding it tough testing the March and April 2016 lows at 1709.23 and 1703.89 respectively. Now, this hasn't stopped the market forming a possible bearish cat's ears pattern over late January and February, though so far the pattern has not been triggered on the downside. I suspect this may be due to the influence of the nearby bright red neckline extension below to the January to May 2021 head and shoulders top, which is currently at 1682.04. This, apart from the 2023 low at 1661.94, is all that stands in the way before the significant congestion zone 1625.52 to 1646.25. Finally, I've decided to draw an April to November 2025 bearish shift pitch hawk to help show the bearish angle of attack of this market. We are today just above the middle time, which is currently at 1710.36. So far today, well, nothing much. We're hanging around last Friday's close, more or less.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.